Wasabi wallet. Unfairly private.
What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we dive in, of course, I want to give a shout out to sponsors of the show, LEDN.io. This is where you can use your Bitcoin for a variety of different services, one of which is a Bitcoin savings account where you can earn interest on your Bitcoin paid in Bitcoin. You can also check out their Bitcoin-backed loans. This is where you can secure a Canadian or US dollar loan using your Bitcoin as collateral. So if you're in a crunch, you need dollars, and you're worried about selling your Bitcoin, well, this could be an option for you. And finally, you can check out their B2X offering if you're a huge Bitcoin bull and you want to gain double the exposure to the price of Bitcoin. There is a link down below for all of these, and if you click on it and you go ahead and end up getting a Bitcoin backed loan, they'll actually give you a credit of an additional $50 worth of Bitcoin into your account. And secondly, super excited to have Rise Wallet working with the show. This is probably one of the easiest onboarding items that I have witnessed as far as getting new people involved in Bitcoin. All it is it's literally a gift card that you can pick up at stores near you and gift to anybody. It has a paired app. You basically just scratch off the back, scan the QR code. It creates a brand new personally held wallet for you and sends a Bitcoin transaction your way as soon as you hit that redeem button. It is super idiot proof. I did do a tutorial on it, link down below. It is available currently only in Canada, but they are looking at expanding too. You just head over to the locations tab to find out where they're available. And if they're not available near you yet, you can order them online via a website called coincards.ca. So be sure to check out risewallet.com and see where they're at. With that, let's dive into the news. So there are many interesting things being built atop Bitcoin now. If you went back a number of years, 5, 6, 7 years ago, even more, there was this proliferation of new coins that were hitting the market. And I mean, it still continues to happen, but the typical narrative was this can't be done with Bitcoin because of the restraints of the protocol. And so we're going to make our own coin to do something that's capable of what we want. And with that, of course, there would be trade-offs. A lot of the time in ballooning the data throughput on the network and making it difficult for anybody to run a full copy of the blockchain and verify the transactions. So Bitcoin had a different approach, and that was to kind of keep the base layer as accessible as possible, so anybody that wants to verify transactions and run a full node could do so if they so please, but then to build out those extra technologies on additional layers, second and third layers, or side chains. And we're starting to see that actually happening. So this is something that on Ethereum, they had built out something called MakerDAO, which essentially allows people to use their, well, on MakerDAO, Ethereum as collateral to get like a stable coin issued, like a dollar pegged coin. Well, the same thing is beginning to happen, but built as a side chain of Bitcoin. And this is being done on Rootstock, which again is a side chain of Bitcoin. And essentially, they're trying to build a few different things, one of which is DOC, or dollars on chain, where you can lock up Bitcoin in a contract that then issues a dollar pegged coin at the time of issuance. But here you may end up, if the market drops and Bitcoin is worth less, you may be able to redeem those dollars for more, just like as if you had cashed out. Or the opposite could be true, where if the price of Bitcoin goes up and you have those dollar peg coins, well, if you want to get back into Bitcoin, you're going to be at a loss. They're also trying to make coins that are pegged to the on-chain fees, which would technically be getting you a bit of a payout. So you'd be, I guess, it would be a way to potentially earn a return on tokens, which could raise regulatory issues, and thus are some of these, even though that's somewhat decentralized, they're still not being issued in certain jurisdictions to avoid too much regulatory scrutiny, there's a number of different financial things that they're looking at building through this project. It's interesting. Again, the thing with Bitcoin is that because it's permissionless, people can build whatever the hell they want to on top of it, whether other people like it or not. We've also seen the proliferation of Liquid Network, and that's starting to be used again to peg stable coins, but also we're starting to see the rise of the equivalent of ICOs or IEOs on Liquid, which is a sidechain of Bitcoin as well. And so some people will not like that, and some people will like it, and some people will be totally indifferent. But the thing about Bitcoin is, once again, it is permissionless innovation, and we've been hearing for years, hey, it's only a matter of time before all of that stuff that all of those other coins were built for can just be migrated back onto Bitcoin, the most secure network out there. And well, we're starting to see it. So for better or worse, whether some people like it or not, all of this stuff is starting to be built on Bitcoin or on sidechains of Bitcoin or on secondary layers of Bitcoin. And will that take a chunk out of the market of some of these other coins? I mean, yeah, more competition, absolutely. Will it supplant them over time? I'm inclined to think it's going to probably command a good chunk of that. Will they completely go away? I don't know, maybe eventually. But either way, we're seeing it now. So let me know what you think about people building things pegged to Bitcoin or creating derivatives of Bitcoin and financial products built atop Bitcoin or alongside Bitcoin via sidechains. Moving on to the next story here, it appears that Chinese Bitcoin miners control 2/3 of the global hash rate. So it's always been pretty well known that a lot of the hash rate was centralized in China, although that has gotten better over time. And part of the symptom is the fact that a lot of the chip fabrication happens in China. Bitmain was a major stakeholder in that early on, although they've kind of had a bit of a fall from grace ever since the fallout with the fork of Bitcoin Cash and betting heavily that that would be this the chain that succeeded the most, which clearly has not happened. And there's just been increased competition from other firms that are also creating and fabricating mining ASIC chips. Well, it looks like right now that they control 66% of global hash rate, and a single area of China has 50% of global hash rate. Now, I'm interested to see exactly how this is calculated, because there's a couple ways to look at it. You could look at it as the actual computers, the actual physical hardware, or you could look at it as the mining pools. Now, we know the mining pools, there's a lot of Chinese mining pools. The thing with mining pools is people can reallocate their hash rate wherever they like. So if a mining pool starts acting kind of sneaky or doing something that the individual miners that are contributing to it don't like, well, they can say, hey, I'm going to point my computing power over to this mining pool and all will be well. Now, the other reason behind this is because a lot of these chips are created in China. What will happen is the company that fabricates the chips will actually put them to use first before shipping them out. So as there's a new bump in technology, we used to see it all the time where we hadn't yet smacked into Moore's Law. We were still innovating very, very quickly as far as ASICs and mining power goes. Well, we've kind of hit that wall where you can only innovate so quickly. So about every 18 months to 2 years, you're going to have a new iteration and a faster chip come to market. Well, we've just kind of hit that point where there's some new machines, faster machines coming to market, but they're not being sold right away. They're being used first before being sold onto the market. So, and because a lot of them are created in China, of course, with new, faster machines that are created there and being deployed there first, well, that's going to kind of lean towards it being centralized in China until that new hardware starts to hit the rest of the global market. Over time, I think we'll see that hash rate drop, and as chips begin to be fabricated in different locales, that will further be distributed. So time will tell, but I'm inclined to believe, as we've seen over the past decade, that we will see further decentralization of mining, whether it be actual hash rate or just mining pools. Both of them seem to be trending that way. Moving on, ING Bank and every other bank under the sun is starting to look into digital asset custody. So I'm not going to spend too much time on this. We've touched on this before. We saw Fidelity dive into digital assets and custody. One of the main issues with in everything when it comes to major institutional players is custody. They need an easy way to custody something, and if it's not approved, if there's not a legal and regulated way for custody, well, then they can't invest or offer it to their clients. Well, we're starting to see the proliferation of that everywhere, and ING is just the next group working on that. So they're looking at a couple different things. Custody for already existing digital assets, but also digital securities, which I think is going to be another big thing that we see in relation to the other story with things like sidechains of Bitcoin, Liquid, Rootstock, things like that. We're probably going to see actual securities and companies start to be issued on these sidechains, maybe just as a bit of a novelty at first, but it could become a trend, even though how you obtain your share in a company is somewhat irrelevant to the value of the share. We may see kind of a big push where, just like anybody who had a website in the 90s all of a sudden was this groundbreaking multi-billion dollar company, well, we could see something similar with any company that issues their actual shares as a token pegged to Bitcoin or some other network. But I guess we'll see. For me, I'm not enamored with this news. It's inevitable that this will happen. And banks, they just want to make money. If they can offer another service and charge for it, you're gonna see it. So, anyways, let's move on. BitMEX derivatives trading platform for Bitcoin where you can bet on a variety of things with futures contracts. Well, they just opened up native segwit support. So Bitcoin has three different styles of address, the ones that start with a 1, a 3, and a BC1. So I'm not going to get too technical about this, but essentially, the 1 is the most data intensive. It takes up the most space and takes up the most space in a Bitcoin block, and thus is the most expensive to send. Regardless of the amount you're sending, it's still going to cost you more if you're sending from an address that is starting with a 1. 3 is the next step down, where it's a little bit cheaper to send, and anything with a BC1 is the cheapest and least data intensive to send on chain. So what kind of savings are we talking about here? Well, it looks like if you are, there we go, native SegWit, which is a BC1 address, saves you about 37% in Bitcoin fees, whereas a 3 address will save you about 17%. And then, of course, the 1 addresses are the most expensive to send from. So if you're currently using a Bitcoin wallet that only has addresses that start in a 1, it's probably time to shop around for some alternatives. So you could check out something like Blockstream Green or Samurai Wallet or Wasabi on desktop or Electrum on desktop. There's a lot of different wallets out there, so take a peek around, see which user interface you prefer most, and get one that has at least a segwit address with a 3, but BC1 is going to help you. One thing to keep in mind is that if you have a BC1 address and you go to send to a Bitcoin address that starts with a 1, you will not be able to do it. You'll only be able to send to 3 addresses, which over time likely won't be an issue. The 3 addresses are universal, can send anywhere, and the 1 addresses are universal, can send anywhere as well. So actually, sorry, it's the other way. Minced my words there. BC1 can send anywhere. It's the 1 addresses that cannot send to BC1. Caught myself there. Anyways, the 1 addresses will be the ones that are eventually least compatible when it comes to sending elsewhere. So what BitMEX did here is BitMEX already has segwit addresses that start with a 3. They just enabled being able to send out to the BC1 addresses, which won't save on fees as you're withdrawing from BitMEX, but the next time you go to send from a BC1 address, it'll cut down on your fees. So, and in some other BitMEX news, they've got a new lawsuit. There's an investor that came in early on with BitMEX and gave them, what was it, $30,000 in 2015, and actually never received his equity in the company. That's pegged to be around $50 million right now. They're seeking $300 million, so $50 million for his equity plus $250 million in punitive damages. Damn. That would help cover some of the lawyer fees and then just, I guess, be a free cash payout. Yeah, so it sounds like there might be some shady stuff there. They're claiming that Arthur Hayes, CEO of BitMEX, sought to conceal information to prevent the recognition of his equity. Yeah, so anyways, I guess we'll see. BitMEX definitely isn't hurting for cash. They just rake it up. Yeah, I don't know. It's funny to see these kinds of things because I did meet Arthur Hayes in 2016 when I was in Hong Kong. He was kind enough to have me up to his office at the time to have a little interview. It was one of my first videos, actually, at least the first few months of the channel. And it was hilarious because I came up, he brought me in. I was like, oh, this is pretty nice. Is this whole floor yours? And he was like, no, just this office is ours, which is about the size of the room I'm in right now, which is actually quite small. It was just enough for myself and him to sit and have a conversation. There was like a desk with a single laptop on it, and then there was another desk that my wife was at just filming the interview. And how times have changed because they now have an entire floor of the most expensive real estate on the planet in downtown Hong Kong. And they're getting sued for $300 million by early investors who only dropped $30K. So yeah, things can happen quickly. Anyways, I'm going to wrap it up there, guys. Thank you very much for watching. Of course, always hit like, subscribe, and share. It's great to share and get more people watching these videos. If you want to help out the show in another way, you can hit up the sponsors in the show notes down below. So that was LEDN and Rise Wallet. And while you're at it, check out Wasabi Wallet. It is great to break the links between you and your coins, obtain some financial privacy, and keep those prying eyes at bay. And finally, if you really liked what you saw, you can drop me a tip via the Lightning Network at my tippin.me page. And with that, I am out. Have a wonderful evening, and I will see you tomorrow for your daily session.